College students with school loans subsidized by Uncle Sam are getting a little anxious.
Unless Congress intervenes, the interest rate on subsidized loans will double on July 1st.
Fox Connecticut's Lori Perez tells us the rate hike is bad news for students who need the help the most.
Brent and Allison, there's a lot of confusion about who the increase will affect. So let's make it clear. If you already took out a student loan, if you're already out of school or you graduated, your loan rate is your loan rate, and you will not be affected by this increase. But if you're still in school and you'll be taking out a new subsidized Stafford loan for next year or in the years after, this hike does affect you, and you'll end up paying more than you maybe thought you would, and probably more than you would like.
According to a map on the White House website, more than 73,000 Stafford loan borrowers in Connecticut might be affected if interest rates double from 3.4 to 6.8%, costing on average almost $1,000 extra over the life of the loans. Asking for more from students who have less doesn't make a lot of sense to students like CCSU sophomore David DeHaas.
The government trying to seek more money. They're doing it through, trying to get it through students who can't really pay the loans in the first place. So I think it's a little ridiculous.
The rate hike will only affect new subsidized Stafford loans. Those are need-based loans for undergraduates only, students for whom the cost of school is more than their family can contribute. In other words, students who might have lots of financial reasons not to go to college and don't need another one. That's the worst-case consequence educators like ECSU President Elsa Nunez are worried about.
We already have made it difficult for a large portion of our nation's youth to go to college. We are about to make it impossible.
Students looking at bigger balances when they start paying off their loans joined President Nunez today to rally support for Congressman Courtney's Student Loan Relief Act, a proposal to lock in the lower rate for 2 years, giving Congress time to find a long-term, less painful solution.
We are working with a lot of student groups who are coming to Washington this week, again, to try and gin up, again, public pressure, external pressure on Congress so that this deadline does not slip. And it's our intention, again, to force consideration of this issue, which protects a lower rate and will save thousands of dollars for the average student.
Congressman Courtney's proposal is one of a few being pushed to beat the July 1st deadline when the rates will double. 8 million undergrads use federally subsidized loans each semester. That's a lot, but many more students actually take out the unsubsidized loans, which are not need-based. The rate on those is already 6.8% and will stay the same for most middle-class undergraduate and graduate school students. I'm Lori Perez, Fox Connecticut News.